Hey guys, welcome back to the show. My name is Brad, and guess what? The Fed dropped the rate for the third time this year. So what does that mean to us? We're going to talk about it next. Firefighter Financial Toolbox. Hey you guys, in case you didn't hear, on Halloween Day, the Fed dropped the rate another quarter point. So, of course, when that happens, I get emails for my cash accounts. This time I got it first from Wealthfront. Wealthfront, hi Bradley. Because of the Fed's decision to decrease interest rates, the interest rate on your Wealthfront cash account is changing from 2.07% APY down to 1.82% APY, beginning today. Your other benefits will remain the same: unlimited transfers, no fees, and your cash is covered by FDIC insurance for up to $1 million through our partner banks. What does this mean for me? This decrease means that for every $1,000 in your cash account, you'll earn $2.50 less in annual interest. Even with this change, we continue to get the highest rate we possibly can, 18 times greater than the industry average, or the mega banks that give you nothing. Why did this interest rate change? The rate we can offer is impacted by the federal funds rate. So when the Fed lowers rates, we have to follow suit. Your cash is still growing. We're always looking for ways to pass along more interest to you. So I decided to do a little looking online, and here's what I found. The Federal Reserve cuts the interest rate for the third time in 2019. The quarter point cut comes as the economy continues to show signs of slowing, but the Fed signaled that it may pause to weigh incoming data before adjusting rates again. Washington. The Federal Reserve cut interest rates on Wednesday for the third time this year, reversing nearly all of the 2018 rate increases that we received, as uncertainty from President Trump's trade war and slowing global growth continue to pose risks to the United States economy. The decision to cut rates by another quarter point despite rock-bottom unemployment and decent overall growth shows the extent to which Mr. Trump's hot and cold trade war, paired with a tenuous global outlook, has put the Fed on the defensive. While the central bank was on a steady march to raise rates just a year ago, it has spent the past several months trying to insulate the American economy against those threats and to keep a record expansion humming. What does that mean for you and I? I decided to look. Now, I have, as you know, I have a Wealthfront cash account, which when I first got it at the beginning of the summer was yielding a 2.57% APY. It's now down to 1.82% APY in just 5 months. What does that mean for us? I see my Ally account go from 2.2% down to 1.80%. I'm expecting a letter from them any day. So I decided I would take a look and see. So I went to bankrate.com and I'm looking at the top 18 online savings banks rates for November 2019. Now you guys take these all with a grain of salt because they could go down. Now, I notice I've done a couple videos in the past, these ones, on Biobank and how they've dropped. Biobank is currently still at 2.27 as of November 2nd, 2019. Now, that could change, but I'm going to go with the latest thing we have. So if we look at the list, you guys, we see we only have 8 banks that are above 2% mark. Everything else, the rest, the next 10 are from 1.9% down to 1.8%. And as I said, Wealthfront, one of my cash accounts, went from 2.07 previously. It dropped a full quarter point to 1.82%, or exactly 0.25% down. Now, I do have a 0.02% higher yield on that than my Ally account, but let's face it, that's negligible. They're both the same. What does this mean for us, you guys? I have to say, I think in the next few days, we're going to see more banks dropping their rates. If I get updates or I find out that they're dropping, I'll make some more videos because you guys seem to like them. The view count seems to show that everybody's keeping an eye on this. Now you guys, here's the thing. Unless you have a huge amount, remember, the primary reason I use these cash accounts are A, for my emergency fund, which is to support me if my wife or myself are to lose a job or have some sort of disability temporarily taking us out of work where we needed money to live on. All right. And I actually save up so that I can fund my Roth IRA at the beginning of the year. Now, if you only have $10,000 in it, you're only talking a difference of maybe $25 a year in interest. So it's negligible. Remember, we're not saving money for the apocalypse. We're saving money for an emergency. Also, if you're saving, for example, maybe for a down payment on a house or a down payment on a new car or something like that, the reason we use online savings is because it is risk-free. It's not an investment. Let me say that again. Money in an online savings account is not an investment. It's a secure way to carry funds. That's all. If you have money more than what you need for your emergency fund, you guys, invest it. A lot of you are waiting on the sidelines for a recession. You're thinking, hey, the stock market's going to drop. I'm going to buy in. You could be waiting forever. I'm not saying don't wait. I'm saying invest regularly and often and keep a long-term mentality on your investments, you guys. Third drop this year. Cash is not king anymore. All right, you guys, if you have any questions about what I said, leave them in the comments. If you agree with me or disagree, let me know what you think. If you got something out of this, give me a thumbs up. If you're new to the channel, please consider subscribing, and we'll see you again. Thanks a lot.